Hello everyone. Welcome to the Stock Minds web channel. Vista Energy, NYSE VIST, delivered a powerful Q2 2025 earnings report, reinforcing its reputation as one of Latin America's fastest-growing independent oil and gas operators. With stellar growth in production, revenue and earnings per share, the stock continues to trade at a valuation that many analysts argue remains attractive. In this video, we will dive into Vista Energy recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Vista Energy. Vista Energy, formerly Vista Oil and Gas, was founded in 2017 by industry veteran Miguel Galuccio, alongside partners Juan Garobi, Pablo Verapinto, and Alejandro Chernyakov. It was launched as a SPAC vehicle in Mexico, with its merger in 2018 bringing in Pelsa and other assets in Argentina's Vaca Muerta shale formation. The company then listed on the NYSE in 2019 under the ticker VIST. Today, Vista Energy focuses on the exploration and production of crude oil, natural gas, and natural gas liquids across Argentina, Neuquén Basin, Vaca Muerta, and Mexico. Its flagship acreage in Vaca Muerta includes blocks such as Bajada del Palo Oeste and La Amarga Chica, boasting over 200,000 acres and more than 1,000 drill-ready well locations. Vista Energy financial performance. Vista Energy delivered an outstanding financial performance in Q2 2025, showcasing substantial growth across key metrics. The company reported quarterly revenue of $610.54 million, a significant 53.9% increase compared to $396.72 million in Q2 2024. Earnings per share (EPS) also surged to $2.16, up 55.68% from $1.39 in the same quarter last year. On a trailing 12-month TTM basis, revenue climbed 49.52% year-over-year to $1.98 billion, while TTM EPS rose 26.05% to $5.47 from $4.34. Vista maintains impressive profitability with a gross profit margin of 77.76% and a net profit margin of 29.12%. The company's efficiency is further reflected in a return on assets of 11.6% and a robust return on equity of 32.74%, despite a moderate debt-to-equity ratio of 1.26. Over the past 5 years, Vista Energy's revenue has been growing at a 55.3% CAGR, and net income has also been consistently growing, demonstrating that Vista Energy has been a strong performer in the past. Vista Energy Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast Vista's 2025 revenue to reach $2.27 billion, a projected 37.93% increase from $1.65 billion in 2024, and non-GAAP EPS to grow 164.81% to $5.35 from $2.02. Analysts remain optimistic, giving a buy rating with a consensus price target of $69.08, representing a potential 41.21% upside, and a high target of $75, suggesting an upside of 53.3%. VIST stock price performance and valuation. At the time this video was created, Vista Energy stock was trading at $48.92 per share, reflecting a 4.5% increase over the past year, which underperforms the S&P 500's 11.4% gain in the same period. However, looking at the longer-term trend, Vista has delivered exceptional returns, with its stock price surging 1,424% over the past 5 years, significantly outperforming the S&P 500's 97% rise. From a valuation standpoint, the stock remains attractively priced considering its strong growth trajectory. Vista is trading at a price-to-sales PS ratio of 2.58 TTM and a forward PS of 2.1. Additionally, the non-GAAP price-to-earnings PE ratio stands at 20.68 TTM with a compelling forward PE of just 10.11, which is low for a company delivering such strong profitability and expansion. Based on fiscal.ai data, if we look at the valuation over the past 5 years, the forward PS is above the historical average, and the forward PE is slightly above the average. The forward PE indicates that the stock is still reasonably valued or potentially undervalued, as Vista Energy is still projected to grow its business rapidly. Vista Energy growth potential. Vista Energy growth prospect remains strong, driven by several factors. 1. Strategic scale enhancement through transformational acquisition. In April 2025, Vista Energy completed a transformative $1.38 billion acquisition of Petronas E&P Argentina, PAPASA, securing a 50% working interest in the La Amarga Chica LAC block. This strategic move immediately boosted Vista's production by approximately 47%, with LAC contributing 39,772 barrels of oil equivalent per day at the 50% interest level. The acquisition significantly enhanced Vista's reserves, adding 280 million barrels of oil equivalent in proven reserves, and increased the company's pro forma production capacity to 125,048 barrels of oil equivalent per day as of Q4 2024. Additionally, the deal expanded Vista's development inventory by incorporating an estimated 200 ready-to-drill wells within the core of the prolific Vaca Muerta shale formation. This acquisition not only accelerates Vista's production growth, but also strengthens its long-term development potential in one of the world's most promising unconventional oil basins. 2. Massive infrastructure investment driving long-term growth. Vista Energy is driving long-term growth through massive infrastructure investments, most notably its participation in the $3 billion Vaca Muerta sewer project. This transformational initiative involves constructing a 437-kilometer pipeline designed to transport up to 550,000 barrels of crude oil per day, with potential expansion to 700,000 barrels. Commercial operations are anticipated to begin in the second half of 2027. As part of this project, Vista secured 50,000 barrels per day of firm transportation capacity with opportunities for future expansion. Additionally, the recent PAPASA acquisition has significantly bolstered Vista's midstream capabilities, adding approximately 57,000 barrels per day of crude oil transportation capacity and 48,000 barrels per day of export dispatch capacity. These combined enhancements increase Vista's total midstream capacity to 144,000 barrels per day, strengthening its ability to efficiently move and export crude oil from its prolific Vaca Muerta assets. 3. Robust production growth trajectory. Vista Energy is positioned for robust production growth, supported by an extensive development inventory of approximately 1,150 wells across its Vaca Muerta acreage, with 945 wells still to be drilled as of 2025. This inventory is strategically distributed among key blocks, including Bajada del Palo Oeste, 550 wells, Bajada del Palo Este, 150 wells, Aguila Federal, 150 wells, Bandurria Norte, 150 wells, Aguila Mora, 100 wells, and Coiron Amargo Norte, 50 wells. Leveraging this substantial inventory, Vista has set ambitious production targets, aiming to reach 95,000 to 100,000 barrels of oil equivalent per day by 2025, and further grow to 150,000 barrels of oil equivalent per day by 2030. The company's wells consistently demonstrate top-tier productivity, with most performing within the top quartile of the Vaca Muerta Basin's historical well performance, underscoring Vista's operational excellence and strong growth trajectory. Risks to consider. While Vista Energy stock looks attractive, we should be mindful of potential risks. 1. Hydrocarbon price volatility. Vista Energy's financial performance is highly sensitive to fluctuations in crude oil and natural gas prices. For example, in 2023, crude oil prices ranged between $70 and $95 per barrel, causing revenue swings of about 15%. Prolonged low oil prices, below $45 per barrel, could render operations unprofitable, as the company still faces significant interest expenses. 2. Political and economic instability in Argentina. Vista Energy operates primarily in Argentina, a country with persistent political and economic risks. As of June 2025, Allianz Trade classifies Argentina as a sensitive risk, reflecting moderate to high uncertainty. Although recent reforms eased currency controls, profit repatriation for pre-2025 earnings remains limited. The company also faces potential threats from sudden policy shifts, expropriation history, and election-related volatility, all of which could impact capital flows, dividends, and long-term investment stability. 3. Strategic execution risks. Vista Energy's growth depends heavily on its ability to successfully execute strategic plans, including acquisitions and concession agreements. The company must adapt swiftly to evolving market conditions and regulatory environments in Argentina and Mexico to maintain its competitive edge. Failure to complete key deals or adjust to policy shifts could delay production targets and limit expansion, potentially undermining long-term value creation and financial stability amid high leverage and volatile commodity prices. Conclusion: Vista Energy stands out as a high-growth, undervalued stock with strong financial performance, robust profitability, and a promising future. Despite modest short-term stock gains, its long-term returns and favorable valuation metrics suggest significant upside potential. With rising production, strategic acquisitions, and analyst forecasts pointing to continued growth, Vista is well-positioned to capitalize on Latin America's energy opportunities. For investors seeking a compelling blend of growth, value, and momentum, Vista Energy remains a strong buy candidate in the energy sector. But remember, this is not a financial advice. What do you think about Vista Energy? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.